Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on gold market. So there's really a few moments that we have to discuss because market starts ignoring the important technical indicators and signals and patterns. When usually this happens, it means that market is driven not by the economical factors. So recent collapse that we've got, it is not normal for potential bullish context. And it means that now investors are actually ignoring, or market ignoring, the technical background that works usually very good in a situation when everything stands quiet and market's just driving by its own. But when investors is becoming frightened or worrying for uncertainty or some other reasons, for example, recent drop on gold might be just extended demand for United States dollar to make investment in the Bitcoin, to make investment in the stock market that has shown a really great rally. It also might be the component of the recent collapse of the currencies and in the gold market. So what I would like to say is that technical signals right now is becoming weaker, or although we have really great stops from technical point of view, how it will be really reliable and in what degree we could rely on it, what the chances that it will work, definitely right now stands lower. But at the same time, we hope that since they are really appearing around very strong levels, we'll be watching for it, and the chances, I still think, not really bad that we could get it. So recent rally to the safe haven, as I said, might be of the different kind. It's even rally not to the safe haven but to United States dollar, because gold market is also the safe haven, but investors are eyeing in a dollar. There are a few reasons for that. As I said, already mentioned, rally on the Bitcoin, investors need dollars to buy United States assets denominated in United States dollars. So there's really big uncertainty around for the Donald Trump steps and his presence in general. In recent just few sessions, as 2 or 3 days, those of you who just at least from time to time watching for news from the United States, you could imagine what the showdown Donald Trump has organized on a domestic political sphere. So it's currently already the Epstein lists coming on the surface. There's new appointment of the FBI chief might be, and even CIA chief. So this is really big show right now inside the United States. Some, well, really big changes, and market now is just boiling in a pot. And in such a situation, nobody knows what really will be. And investors are getting some more insurance buying United States dollars and see, because now the political crisis in the United States, it seems, stands in past. So foreign investors once again might be thinking about investing in the United States, and that leads to corresponding action on the currencies and gold market in particular. Since the action here stands relatively fast, I think that we have to keep an eye also on the higher time frame. On the weekly chart, market actually now skips the step with the pullback that we thought might happen in the beginning of the week. So if you remember here, we were thinking that it might be upward action, just because market has formed the grabber recently. But as you can see, the grabber has been destroyed in the blink of an eye, right in the one session. And currently we are coming to the second point that we also discussed in the weekly report, which is potential. First is the bread and butter trade, because market coming to the first support. This is 26 fib level. This is weekly oversold, lower bar of the channel. From the technical point of view, this is just perfect combination of the support areas that in a normal situation definitely will trigger some pullback or at least market will spend some time around it with flirting around and showing at least the 30% retracement. What will happen right now, it's very difficult to suggest. So in what degree this pattern will work, but this is definitely the point that we're watching for. On the daily chart, it relates to actually potential head and shoulders that we already talked about. These levels we do not need anymore because they are just miserably broken. So let's take a look at what we have here. So as you can see, this is also the confluence support, not just the single fib level. 25.93, the 618 on the daily. 25.98, the 30% support on the weekly. Combination of these levels creates the confluence support area. Market stands oversold as on the daily chart, as on the weekly chart. What else background we need to consider taking a long position for the possible pullback? At least to the 618 retracement back to the 2680 area, where the top of the right arm might be formed. That's in towards what we have. Now, speaking about details of the possible position taken, in the current circumstances, we probably need to wait for a pattern. So here market also reached 1618 extension of this most recent upward retracement. It's very typical ratio of head and shoulders pattern. You could also imagine some kind of the butterfly. So here is a few options exist for position taking. If you would like to trade it on the weekly time frame, on the daily, probably you should not risk too much, and you could wait for some more extended pattern on the follow time frame chart, on the hourly chart. Like as I said, this potential head and shoulders patterns might be formed, and you could get the entry somewhere around 2650 later. If you prefer to act on the earlier stage of the reversal, then you have to drop your time frame even more, for example on the hourly chart, and trying to catch some minor patterns around the bottom. It might be also same head and shoulders or something. And here the warning to you is that take a look that actually here we have on the daily chart as well a kind of the ABCD pattern that has the target around 2565. Personally, I think that it has the minor actually importance just because the strength of the levels that we have on the high time frames and in general the shape of the head and shoulders, they are more important. But since market has very strong bearish pressure for now, it could flirt around. Maybe some spikes might be in moment of the release of the inflation data tomorrow, and the CPI numbers will be released. So by some way, occasionally it could try to complete this, although the price could stay around 26, remains around 26. Just minor spikes might be on date release or something. Just keep in mind this level. This might be important, especially if you prefer to not wait and trying to take the position in some advance, let's call it in this way. It's just watching for minor patterns on the hourly chart, for example, like here. This level might be important. So as a bottom line, market stands in very strong support. Technically, everything is ready for a possible pullback. The big risk is that driving factors that now are moving the gold market. They are actually not technical, not economical. So they could distort the overall situation and normal proper market reaction on the technical issues. That's the major problem for now. But let's keep watching. It's actually the only step that we have currently. I hope that it still works because the technical levels is really very strong. So, and let's watching for the patterns. Using the patterns on the back could save lots of money and actually bring us more confidence that everything will go really nice. So that's actually our 2 cents on the gold market situation.